Imagine waking up to find that the seemingly unstoppable tech giants have stumbled, dragging the entire market down with them. That's precisely what happened on Friday as the S&P 500 took a nosedive from its record highs, with Dell and Nvidia leading the charge downwards. But here's where it gets controversial. The culprits? High manufacturing costs, fierce competition, and a dash of inflation data that's got investors scratching their heads. Let's dive in and explore the chaos. The S&P 500, Nasdaq, and Dow all took a hit, with the S&P 500 dropping by 0.64%, the Nasdaq plummeting by 1.15%, and the Dow falling by 0.20%. But why the sudden downturn? Well, it's a mix of factors, and this is the part most people miss. It's not just about the tech giants. It's about the ripple effect they create. Dell, once a titan of the tech industry, saw its stocks tumble by nearly 9%. Why? High manufacturing costs for AI-optimized servers and intensifying competition overshadowed the company's otherwise bullish demand forecast for artificial intelligence infrastructure. It's a classic case of too much ambition meeting too little execution. Here's a thought. Is Dell's struggle a sign of broader issues in the AI sector, or is it just a blip on the radar? And this is the part most people miss. The impact of these high costs and competition isn't just felt by Dell. It's a warning sign for the entire industry. Nvidia, another heavyweight in the AI arena, didn't fare much better. Its stocks dipped by 3.4%, marking the third straight day of decline. The company's quarterly report fell short of investors' high expectations, but it did confirm one thing. Spending on AI infrastructure is still strong. But here's the kicker. Is Nvidia's struggle a sign of overinvestment in AI, or is it a temporary setback? And this is the part most people miss. The market's reaction to Nvidia's report could be a harbinger of things to come for other tech giants. But it's not all doom and gloom. U.S. consumer spending increased by the most in 4 months in July, with services inflation picking up. Economists, however, don't believe this will prevent the Federal Reserve from cutting interest rates next month. Why? Because the labor market conditions are softening, and the Fed is likely to prioritize economic stability over short-term inflation fears. But here's where it gets interesting. Will the Fed's decision to cut interest rates be enough to boost the market, or will it backfire? And this is the part most people miss. The Fed's actions have far-reaching consequences, and their decision could either save the market or send it into a tailspin. And this is the part most people miss. The end of a U.S. tariff exemption for package imports valued under $800 also raised costs for businesses and consumers. This, coupled with the inflation data, paints a picture of a market under pressure. But here's the million-dollar question. Will these pressures lead to a market correction, or will they be absorbed without major disruptions? And this is the part most people miss. The market's resilience in the face of these challenges will be a true test of its strength. But here's the twist. Alibaba, the Chinese tech giant, saw its stock soar by 13%. Why? Stronger than expected quarterly growth in its cloud computing business, driven by AI-related demand. And this is the part most people miss. Alibaba's success could be a sign of things to come for other tech companies, especially those with a strong focus on AI. But here's the catch. Will Alibaba's success be sustainable, or is it just a flash in the pan? And this is the part most people miss. The market's reaction to Alibaba's report could set the tone for future investments in AI. So, what's the verdict? Is the market on the brink of a correction, or is it just a temporary setback? And this is the part most people miss. The answers lie in the details, and it's up to us to decipher them. But here's the final thought. The market is a complex beast, and its movements are often unpredictable. But one thing is for sure, the tech giant struggles are a wake-up call for the entire industry. And this is the part most people miss. The future of the market depends on how these challenges are addressed, and it's up to us to stay informed and make the right calls. So what do you think? Is the market on the brink of a correction, or is it just a temporary setback? Share your thoughts in the comments below and let's spark a debate.